There's a really small crypto rally today with quite a lot of volatility following the latest statements from Donald Trump about the war. We're also going to talk about Hyperliquid. I'll tell you about Wall Street going after crypto heads on. Talk also about Coinbase, about Starknet, and a bunch of other things as well. Hello, everyone, and welcome to CryptoRed, the crypto news channel. Let's start with the price of cryptocurrencies. Bitcoin is getting close to $70,000. Ethereum is around $2,000. Hyperliquid keeps going up. I've been telling you for a while now that Hyperliquid has been on a steady rise, and actually the first piece of news is about Hyperliquid, the open interest on Hyperliquid, which basically represents how many trades or the value of the trades that are currently open on the platform. And here I'm talking specifically about the HIP-3 platform, let's say the RWA, the tokenization part of Hyperliquid that was recently launched. Well, the open interest has reached $1.2 billion. What's interesting about open interest is that it's not something that you can really fake. Unlike trading volume, with volume you can have wash trading and a bunch of other tricks. But open interest is a key metric that really shows interest there's about trading in the platform. And here there's a lot of interest on the HIP-3 markets. And this mainly includes things like gold, silver, oil, and other commodities. There's actually been a huge amount of activity on these pairs, which I remind you cannot normally be traded 24/7 on traditional markets, but on Hyperliquid it is possible. And I think that this is a narrative that could help Hyperliquid over the coming weeks, over the coming months, and even over the long term. Hyperliquid is slowly turning into a global trading platform, not just a crypto trading platform. The transformation happening right now is really massive. Let's move on to the rest of the news. Donald Trump said that the war with Iran could actually end very soon. Following those statements, oil prices dropped a bit and crypto prices moved slightly higher. He tried to reassure the market, at least that's what it looks like. But at the same time, he also threatened Iran. He said that if Iran were to block the Strait of Hormuz, preventing ships from passing through, then the United States will strike back 20 times harder. So tensions are still clearly there. Honestly, I don't really believe the idea that this is about to end soon. It could end soon, sure, but it could also last for weeks, months, or even years. Who would have predicted when the Ukraine war started that it would still be going on today? There were different opinions at the time, but the truth is you can never really predict these things. What's certain though is that if it continues, the impact on the economy could be huge. We could easily see inflation rising again, the Fed keeping interest rates high, and all of that that issues related to inflation. That's definitely possible, but yeah, let's hope it is not the case. And the real problem is the lasting disruption around oil. But if you're in crypto and you believe in it for the long term, honestly, it shouldn't matter that much. 1 year from now, 2 years from now, 3 years from now, it probably won't have that big of an impact. Just look at how much less we talk about the war in Ukraine now and its effect on the economy. The global economy adapted in a certain way. That said, if tension with Iran escalates further, I think the consequences could actually be more serious. But again, in the long run, I don't think it changes the fundamentals for crypto. Now, moving on to regulation in the United States. You might know the Clarity Act, which the crypto industry has been waiting for. Well, there is an interesting article on CoinDesk showing that Donald Trump is threatening to block all the bills that are about to be signed into law. If the bill about voter ID, meaning the requirement to verify someone's identity when they want to vote in the United States, if this bill does not move forward, Donald Trump is threatening to block all the bills. I have to say, I'm pretty surprised that this kind of bill is not already voted. But yeah, there's been a kind of conflict between the president and the Congress about this bill. So Trump basically said, until this passes, he won't sign any other bills. That could end up delaying the Clarity Act. Even if it gets voted on in Congress, Donald Trump wouldn't sign it as long as the voter ID bill hasn't passed. We'll see how that plays out. Personally, I think it's probably just a delay, maybe a few weeks, maybe a couple of months. But yeah, I'm not really worried about that. What worries me more is the whole situation around the US Bitcoin reserve. There was an executive order about it last year, I believe, but after that, nothing. Nothing has actually been voted on, and that's more concerning. From what I've seen, even in the best case scenario, it might get voted on by the end of the year. But honestly, nothing is certain. And unfortunately, until something is actually voted into law, there won't be an official Bitcoin reserve created by the United States. There also won't be any framework in place for how the government could actually accumulate more BTC. Now, another thing I mentioned earlier is that the banks are really going after crypto right now, and it's getting pretty aggressive. There is a group called the Bank Policy Institute, which represents several major banks like JP Morgan Chase, Goldman Sachs, and Citigroup. They're currently studying the possibility of filing a lawsuit against the Office of the Comptroller of the Currency, or the OCC. It's basically a regulatory body that grants license allowing companies to operate as banks in the United States. The banks are considering legal action because the OCC is apparently close to allowing certain crypto companies and fintech firms to obtain the banking license. And according to the banks, these companies shouldn't be able to get those licenses because they supposedly don't meet the same guarantees and safeguards that traditional banks have to comply with. What's pretty crazy is the contradiction. On one side, you have people like Jamie Dimon saying that if crypto companies want to offer yield, then they should be regulated like banks. But on the other side, when those companies actually try to obtain banking licenses, they're told they can't because they can't become banks. So clearly, the banks are doing everything they can to block crypto companies they want that want to offer new services. They want to block yield on stablecoins, block companies from becoming bank, and basically slow down the whole crypto industry. I think the real reason is that banks were simply too late. Banks should have turned themselves into crypto companies long before crypto companies started turning themselves into banks. That's something I've always said. I never understood why it wasn't possible to just buy crypto directly through your bank. They had everything they needed to succeed: the massive user base, the infrastructure, the trust, and the new potential source of revenue, but they let that opportunity slip. Honestly, Coinbase shouldn't even exist in that sense. Exchanges wouldn't have needed to exist in the first place because people could have simply bought crypto directly from their banks. But yeah, this did not happen. Yeah, let's talk about other news. Let's talk about Europe. Coinbase had just launched trading for future contracts, basically derivatives with leverage up to 10x in Europe. This has already been available in the United States for a while, but until now we didn't really have anything like that in Europe. So now around 20 European countries have access to it. They're doing this under a framework that is really specific to this kind of leverage. It's not MiCA, it's another framework, MiFID, but yeah, it will launch. It's launching in France, Germany, Netherlands, and other countries. So let's talk about Starknet now. Starknet has announced a new token standard called STRK20. So what exactly is the new standard? It's similar in spirit to the ERC20 standard, the token format used for most tokens deployed on blockchains, which originally started on Ethereum. The difference is that STRK20 adds a privacy layer directly at the token level. And that's the key point. The privacy features are built in directly into the token itself. It's not some third-party application. It's not an external mixer or anything like that. The confidentiality mechanisms are native to the token. With this system, you can choose to send confidential transaction or non-confidential one. And there's also a mechanism that allow you to disclose certain information to a third party if necessary. For example, if the police or a bank or regulator asks to prove a particular confidential transaction, who you send it to, when it happened, things like that, it is possible to do that with a special key. Now that obviously raised some questions because it shows the limits of privacy, but at least it gives you privacy by default with respect to the public, while still leaving the option to reveal certain details if you want. So yes, it's something to keep in mind, but personally, I think it's a good thing to have these kinds of privacy and security mechanism built in by default. It's hard to imagine a future where the blockchain becomes the place where people store everything, exchange value, and run the daily transaction if everything is permanently public all the time. Solutions like this could really help make that more practical. Another point they mentioned is that this could also enable confidential decentralized finance. I'm curious to see exactly how that will work in practice. From what I understand, it will still require some development work. It won't immediately support the entire DeFi ecosystem. There will need to be integration and additional infrastructure for each protocol. But yeah, they've already announced a partnership with Ekubo that should allow confidential swaps and also BTC staking on Starknet network. That's something they had actually announced some time ago, the BTC staking part. They had previously talked about similar product involving confidential BTC, but this new token format is basically the foundation of all that. So from a technology standpoint, it's very interesting. And from a community perspective, I think it could attract quite a lot of users to Starknet. Starknet's team also has strong expertise in privacy technologies. Just a reminder, the founder of Starknet is also one of the co-founders of Zcash. So when it comes to security and privacy-focused blockchain projects, they definitely know what they're doing. All right, that's what I wanted to cover today regarding the latest crypto news. I hope you enjoyed the update. Don't hesitate to like the video, leave a comment and subscribe. And I'll see you tomorrow for the next one. All right, take care. Bye-bye.